So good evening from Wolfville and Mi'kma'ki, the ancestral and unceded territory of the Mi'kmaq people. My name is Oonagh Proudfoot, and I am the Executive Director of Alumni Affairs in the Office of Advancement at Acadia. Delighted to have you join us this evening for the next in our virtual events series, Insurance Questions and Needs. And we have folks from both of our affinity insurance providers with us this evening. So I'm going to cover a couple of housekeeping items and then introduce you to our speakers this evening. Before, as I said already, but just to recap it for those who have just joined us, we ask that you disable your cameras and click the mute function. We're often unaware of the background noise that we have in our homes. Rich coming from me right now with my dog chewing on his bone in the background. So when you're not speaking, if you could just remain muted, that would be great. If you have questions throughout the presentation, please feel free to ask them one of two ways. You can unmute yourself and ask the question when there's a pause in the conversation, or you can write your question in the chat function in the Teams platform. And I'll keep an eye out for that chat function on the side of the screen to see when we have questions from folks in the audience. We have several prepared questions for our speakers this evening, though, so we'll get them warmed up and going with some questions that we think are sort of pretty straightforward go-to questions that are probably going to be on the minds of many of us here this evening. So launching your chat function is just a simple clicking on the icon that looks like a text box, and that should bring up your chat function on the side of your Microsoft Teams platform. We've entered all of your names into a draw for some Acadia swag, as well as some products that were provided for us by Industrial Alliance and TD. So we'll get to the names of the winners at the end of the session, and we'll send out your packages to you. So now what I'd like to do is introduce our two speakers, and I see we now have video from our second speaker. Nice to see you there, Scott. That's great. So joining me this evening are Carlene Richter and Scott Grant. I'll introduce them, and then each of them is going to take a moment to just do a brief introduction of the companies that they work for and their offerings. So we'll start in no particular order, or maybe it's alphabetical. I promise, Carlene, I am not starting with Scott because he's a grad of Acadia, but I am starting with Scott. So Scott Grant is with TD Insurance Meloche Monnex and has a 25-year background in property and casualty group insurance. He joined TD Insurance in April 1996 and has held progressively senior positions within the organization, including team leader and manager, client services and manager, and resource optimization. He is a graduate from Acadia University with a Bachelor of Business Administration in 1993, the same year as I graduated, so a classmate of mine, and is currently responsible for group management in Atlantic Canada, as well directing managing the day-to-day relationships for most of the college and university partnerships in the region. Scott is also passionate about and holds a leadership role on the Atlantic TD Persons with Disabilities Committee. So thank you for joining us this evening, Scott.
Thank you for having me.
You're very welcome. And joining Scott is Carlene Richter with Industrial Alliance Insurance and Financial Services. Carlene is an insurance professional with over 12 years of experience. She works in special market solutions at IA Financial Group, where she leads their admin, contracts, and underwriting teams and services key accounts. Carlene also volunteers as the president, national team of Young Women in Business, a nonprofit organization providing young women with a platform for growth and development in business. And welcome, Carlene. Thank you for joining us this evening.
Thank you.
So as I say, there's our two speakers for this evening, and I'm going to hand it over to each of them to provide a little bit of an introduction. But before I do that, I'm sure many folks on the call already know that Acadia Alumni Association has an affinity partnership with both Industrial Alliance and TD Meloche Monnex, and so happy to have you both here this evening to have this session about questions that are on many of our minds. For me, it's always a fall thing that I start to think about insurance. I'm not sure why I always default to the fall. It's sort of like check your smoke detector kind of season for me. But also providing, of course, an opportunity for both of you to represent your companies, as I say, who have affinity partnerships with the Alumni Association. So I'll hand it over to both of you. And because I introduced Scott first, Carlene, I'm going to give you the stage first. And when you finish up, we'll hand it off to Scott.
Thank you so much, Oonagh. So for over 55 years, Special Market Solutions, a division of IA Financial Group, has provided special risk insurance to employers, associations, and organizations across Canada. Partnering with Acadia Alumni Association since 2015, Special Market Solutions is very proud to offer insurance solutions to Acadia alumni members, as well as their spouses and children. By purchasing through the Acadia Alumni Group Insurance Program, members have access to comprehensive insurance at group rates with products including term life insurance, AD&D, critical illness, travel, and health and dental. Thank you.
Over to you, Scott.
Excellent. Thank you very much, Oonagh, and welcome everybody. Thank you again for having me. I'm really thrilled to be able to chat with you for a little while this evening. I'll start off as a typical insurance person and say the disclaimer that our legal team tells me that we have to have. I am a licensed agent in a number of different provinces across Canada. However, the information we'll share tonight is for information purposes only. I'd recommend that if you have any questions at all about your personal situation, your personal policy, whether it be with TD Insurance or with another provider, please make sure that you clarify all the information that we provide tonight with your official broker or your official insurance company for sure. So TD Insurance and Acadia University Alumni Association have had a long lasting relationship for over 26 years, in fact, since 1994, to provide the Acadia alumni with preferred rates on home and auto insurance, as well as the students that go to Acadia. And we currently insure over 4,000 Acadia alumni and students who hold over 7,000 policies with us. And we've had constant growth in our partnership and in the presentation year over year, quarter over quarter since its inception. So it's a continually growing and great benefit for the alumni and the Alumni Association. TD Insurance is part of TD Bank Group, of course, one of Canada's largest financial organizations. So it's always nice to be backed by the big green machine. And we've earned our place as the largest direct response home and automobile insurance company in Canada. So we are a leader in the space, and we're also one of the top 3 personal lines, meaning home and automobile insurance companies overall in Canada. And right now we have over 785, organizations that count on us to provide similar partnerships like we have with Acadia. And of course, we provide discounted rates to all Acadia alum. So I guess we'll get to some questions.
Perfect. Thank you very much, both. That was great. So the last virtual event that we had, I did an interview with somebody, and we started with rapid fire questions, and it was kind of fun. So if you two are up for it, I'm going to do the same thing with you this evening. The questions that I did in the last one were more about him as a person, because it was sort of it was a personal interview with Len Hawley. These ones, go figure, are going to be insurance related. So if we are flip-flopping back and forth who's getting the airtime, we're going to start with Scott this time. So
sounds good.
Rapid fire questions, Scott. That's where I'm just going to pose a quick question, and you basically get a one-word answer, and I'm going to move on to the next one.
Perfect. So I'm hard with one-word answers, Oonagh. You know me better than that.
This I know. This I know. So I was going to say, appropriately enough, buckle up, and here's your questions.
Nice.
Does the color of your car affect cost for insurance?
No.
Does home insurance cover the market value of my house?
Good question, but no, it covers the rebuild cost, not the market value.
One word, Scott. No.
Sorry, I told you I couldn't think of that.
Does where you live in Canada affect your car and home insurance cost?
Absolutely, yes.
Do certain car models have higher insurance premiums than others?
Yes, they do.
By law, do I need to have insurance on my home?
No, not by law, but if you have a mortgage, your mortgagee will require it. Again, sorry for the one word.
Do parking tickets affect the cost of my insurance?
No, they don't.
Will a speeding ticket affect the cost of my insurance?
Yes, that could definitely affect the cost.
By law, do I need to have insurance on my car to drive it?
Yes, you do.
And do I get a discount on my home and auto insurance through TD Insurance for being an Acadia alum?
Absolutely.
Excellent. Thank you. No All right, Carlene, are you ready?
I'm ready.
A little bit of pressure here. So over to Carlene, and here's your rapid fire. Am I covered under my parents' health and dental coverage once I graduate?
No, you're not.
Can I be too young to buy life insurance?
Nope.
Am I safe to travel with no travel insurance?
I can't emphasize it enough. No.
Okay. If I have an existing illness, can I buy insurance?
Yeah. Yes, in some instances.
Okay. And here's just 2 or 3 true or false. So you ready for this one? True or
I'm
false?
ready.
Life insurance companies find ways not to pay.
False.
Insurance is only for people who own a house or have children.
False.
I should temporarily cancel my insurance or wait to purchase if I am trying to save money.
No. False.
And last one over to you as well is, do I get a discount on my home and on my insurance rather if for being a Cadia alum?
Yes, absolutely.
Excellent. That was great. Thank you, you two, for having some fun to start this off, but all really relevant questions. And some of them, sort of stem from that myth, am I too young to buy life insurance? Well, absolutely not, but a lot of people don't start thinking about that until much further on in their years. So great start to the conversation and great start to the question and answer. So now I'm going to move into a series of questions for each of our speakers in segments. So and by that I just mean I've sort of broken it down to 2 or 3 per person, so that you get a little bit of unbroken airtime, if you will. Now, having said that, though, I would encourage you both, as the other person is answering questions, if you have something sort of to contribute or to expand on from your perspectives, please feel free to. So, Scott, we're going to start with you on this one. Can you explain how insurance works? For example, where does the money I pay for my policy go?
Sure, absolutely. So for home and automobile insurance, and this is a very popular question because a lot of people don't know all the answers to this, and I have a few stats that I can share too to finish off the question. But basically, the principle behind insurance is to put you back in the same financial position you were prior to the loss that occurred. So if you had an accident, it's to put you in the same financial position, not better, not worse. So ultimately, the way that insurance works, and it's been like this for all of history, is the premiums or the cost that you pay for your insurance are gathered from the many, from the population, to pay out the claims for those few people that actually have claims. That's why there's so many of us that are out there and say, oh, I've paid for my insurance for years and years and years and years and years, and I've never had to use it. Well, good for you. However, the payment that you've put in has been your peace of mind. And so that you know that your insurance company is there in the time that you do have an accident, or you do have heaven forbid, have a fire at home, or a break-in or something like that, or your roof blows off or something like that. So it's the principle that the cost, the premiums of the many pay for the costs of the few. And then the follow-up to that and some stats that I have is actually from the Insurance Bureau of Canada, and it's what I tell my friends that sell other types of things. I always joke around with them saying selling insurance is not like selling pencils. At any given time, somebody can break a pencil and need a new one on any given day. For insurance, your renewal only comes up once a year, and very few people even want to deal with it. They kind of get that nasty envelope in the mail and they open it up and go, oh, good, it didn't go down too much, and they stuff it in a drawer and they run away. They don't want to call their insurance company, and that's not always the way to handle it. You should shop around for your insurance on a regular basis for sure, and get some comparisons, if nothing else, to find out that you're getting a good rate and a good coverage from your current company. And some information that I have from IBC, people wonder, if you just take $1 of your insurance premium, how is that dollar subdivided into the different things that insurance covers? So out of $1, on average, 56.9% of that dollar, so almost 60% of that dollar, is spent to pay those claims, to pay those accidents, to pay those damages to your homes. 7.9 cents, so let's say 8 cents, are reinvested by the company in order to have more funds to pay those claims. There's 13.6% of those funds are to pay taxes, because we all pay taxes and we're a company. And then only 21.6% of that is for operating expenses, would be to pay my salary and pay our employees' salaries and cover our costs of acquisition and cost of our buildings and whatnot. So you can see there's a large division of that $1 of home and auto insurance premium. Yeah.
Excellent, thank you.
You're welcome.
I'm already learning a lot. So I learned a little bit during the rapid fire, but absolutely had no understanding of that breakdown. So I appreciate that.
No
And
problem.
now I'm going to just pose a second one to you before we move over to Carlene. And that is, why do we continue to see increases in what we pay for home and auto insurance?
That's another very popular question, and I'll tell you that for sure. Ultimately, for both, you can throw them into big buckets for both home and auto insurance, and that is really the increased cost of claims. Now, for the two different types of insurance, there is very different reasons for those increased costs and claims. So if we think about the home insurance, apartment insurance, condo insurance, so you're what we would call your homeowner's package. Some of the reasons for that, one of the biggest ones is Mother Nature, the storms that we get. We just escaped by Teddy here in the Atlantic provinces last week, and luckily we didn't have very much damage. But those big storms and big catastrophes, such as the Fort Mac fires, the floods in Calgary, those things used to be once in 100-year storms. Now they're very regular. So Mother Nature really takes a toll on that, and so the claims payouts are much higher for that. The other thing that I always talk about is the way that we utilize our homes now. So the costs of claims go up for homeowners insurance because in the past you'd buy a starter home and you wouldn't have a finished basement. You'd live in it for a little while. Maybe your family grows a little bit by one or two children, and then you end up saying, well, my house is too small now. I'm going to sell this one and move to another one. A lot of people now aren't doing that. So what they'll do instead is they finish the basement area that was never finished before. And that basement area, I always kind of make a joke. And say, your basement is just a bucket waiting to fill up with water. Eventually it will. Right? So in the past, it was empty, maybe a little bit of gyprock in grandma's old trunk. With some antiques in it maybe, but now it has computer systems and leather furniture and home entertainment systems. So what was used to be a $500 claim just to get rid of some junk in the basement and dry it out is now in the tens of thousands of dollars. So that's sort of it on a home insurance side. On the auto insurance side, it's more recently, it really is has to do with the technology that's in vehicles now. Like the cost to repair vehicles now is going through the roof because of all these safety features. Now the safety part reduces rates a little bit, but the cost to repair those safety parts, again, you used to getting a little bit of a fender bender, maybe somebody rear-ended somebody. It would cost in the past, $1,000 for a new or $500 for a new bumper and $1,000 to get the paint. Now with all the computer and electronics that are in it and all the re-gauging you have to do, that claim is in the tens of thousands of dollars, even though it's just what we would call just a little fender bender. So those are some of the reasons. There's other reasons added in there, but those are some of the big reasons why you see insurance go up. And it's basically because those costs and the number of claims that we have to pay out on is escalating drastically. The other thing I should mention on the automobile side is the increase in the number of accidents due to distracted driving. I really would be remiss if I didn't mention that in this day and age. I've saw some stats just the other day that unfortunately fatalities from car accidents due to distracted driving has surpassed fatalities due to drinking and driving. So it is a problem. It really is a problem, and a number of your accidents, whether people will admit it or not, are normally because people are doing this while they're driving. Texting and driving. So please, public service announcement, put your phone away when you're behind the wheel.
That's great, and absolutely, that falls under one of those categories of isn't it obvious? But yeah. You know what? Sadly, as your statistics have just pointed out, it's not, right? Yeah. So appreciate that, Scott. Thank you. Carlene, I'm going to ask you a couple of questions that aren't necessarily even remotely connected to the two that I asked Scott. But as I said before, if you have thoughts or insights based on the questions that I've asked Scott and you want to chime in at any point in time, please do.
Sounds
so
good.
We're gonna start with back to that age question that I asked you during the rapid fire. At what age should I start thinking about my insurance needs?
So it's never too early to start thinking about your insurance needs. Generally speaking, rates will always be lower when you're at a younger age. And so it's really a good idea to start thinking about insurance and getting that coverage in place, thinking ahead to your needs in the future before your health concerns develop. It ensures you have peace of mind down the road.
So, interesting. Now, I've already gone off script as you answered that question, and thinking about the situation that we find ourselves in terms of the pandemic, and sort of what that meant from an insurance needs perspective, from your side of things, in terms of lots more people looking, or lots more claims, or it's sort of just in general. I mean, I'm not obviously looking for specifics, but just sort of give us an idea of what it looked like from your perspective in the pandemic.
Yeah, that's a great question. So I don't think, I'm so sorry about the background noise. My sincere apologies.
I don't have enough toys and treats.
But you bring up a great question. So I think with the pandemic, we haven't necessarily seen an increase in claims, but what we do see is an increase in the interest for insurance. I think it's brought a lot of attention to the need for it, and we need to have it in place before something like the pandemic or a health concern arises. So we're seeing a lot more interest, a lot more questions about things like life insurance and critical illness insurance.
So appreciate that. Love the amount of calm that you kept while you were answering that question with your puppy in the background. And I will tell you that my puppy sat up and took great interest while that was happening. So I'm going to switch over and ask Scott a question or two if you need to dip away and address your four-legged friend's needs right now. If not, I'm happy to carry on as well. But I will flip to Scott for another question and give you a moment. So Scott, back to you, and don't pinch your dog and get your dog barking in the background
I'll try not
to get away here. So how about explaining a little bit? Let's focus on car for a little. Actually, you know what? Let's go back and ask you the same question in terms of the pandemic and how that affected insurance claims or insurance needs, or just even your response time and your ability to address what was happening.
Yeah, you know what? It was a very interesting time to go through in the insurance industry. And there was a number of different things that occurred for us. One of the big things was, especially in the early days, say March, when everything sort of shut down, everybody went home to work from home. Nobody was driving. Like, people stayed in their home for 2 months. We stayed in our home pretty much. So of course that dropped our automobile claims to next to nothing, really. So that was a good situation for us to have as an insurance company, and of course people not having to deal with their claims. The other thing that happens with that, though, is, well, people sort of tend to say, well, I'm not driving my vehicle, so do I get any kind of price break on that? And we did put in a number of different relief efforts, we called them. So you could give us a call at the time, and there is a lower price if you don't drive your vehicle to and from work. So it's a different rating, so you can save some money there. There was also, of course, unfortunately, a number of people that lost their jobs and were maybe having challenges paying their bills. So during that time, we were able to provide relief, monthly payment relief for a limited amount of time in order to let people get back to work and get back on their feet, amongst a number of other initiatives we had. So on the auto insurance side, it was very interesting, again, with the no claims. Now people are driving again, really, across Canada, and our claims are jumping right back up to where they were as far as automobile accidents go. The thing that happened as well that we didn't realize is this all happened at a very interesting time, again, which would be what we would call the start of our peak season. So sort of springtime is the peak season for home and automobile insurance, because the weather gets nice and people go out and start buying cars and go looking for new houses because spring has sprung, right? So we would have normally in March, April, we would have a large call volume. And that didn't happen because people weren't allowed to leave their houses. Nobody was selling any cars because nobody could test drive them. Nobody could see any houses. So that didn't happen. And that pushed everything later. And to be honest, the call volumes that we've seen since the last month or so, it's astronomical for a number of different reasons. Like we're looking at, I saw some stats today that we received over double the forecasted number of calls that we had over the last couple months. Now it's starting to slow down now, and anybody on the phone who tried to give us a call, admittedly, because of that, we would have had some very long wait times, and I apologize for anybody who had to go through that. The good thing is I hope that you got exceptional service once you did get through. And there's always a number of online efforts. And that's the other thing that the pandemic did for us, is it really accelerated our online business. So we're now opened up to be able to, we call it bind online, but you can get a quote online for us and purchase your insurance all online without talking to an advisor if you like. If you're comfortable enough, get all the information. You can chat online. We've expanded that team. So good things come out of the pandemic too. So some accelerated information on the bind online. So
yeah, I'm pretty sure
interesting times.
Pretty sure the entire world saw an increase of online everything
That's for sure.
when the pandemic hit, for sure.
That's for sure.
So we'll flip back to you, Carlene, and ask, am I able to purchase coverage for my spouse and children? So sort of in line with kind of when is a good time to start. Let's fast forward now and assume I've just launched myself right into a family and have a spouse and children now. So
that's a great question. And again, I apologize for the noise. Hopefully it led to a comedic break for a few of you. So good question. Spouses, including common law, and eligible dependent children can be covered under your plan. Dependent children especially can be on your coverage until they're 21 or 25 if they're in school full time. So that leads really great back to the question you asked in the rapid fire. Your dependent children can stay on until they're 25, but at that point, they have to come off of your parents' plan because they're no longer dependent on you as their provider. So same as you, if you're a student or an alumni, when you graduate, you're no longer eligible to stay and remain on your parents' plan, and it's time to start looking for your own coverage. It's also really important to do that in a very timely manner from no longer being eligible under your parents' plan so that you don't have a break in coverage.
So what I heard there is by 25, my children are meant to be dependent and out on their own. So I'm just repeating that so that they can hear me.
Yes.
Okay.
Yeah, exactly.
So just a reminder, folks, that if you have questions as our speakers are answering the questions that I'm posing to them, to please feel free to write it in the chat function. I am keeping an eye on it, as I say. I don't want to hog all the airtime and take up all the question asking if there are specific ones that folks on the line have. So Carlene, what is the difference between group insurance and individual insurance?
Again, a really great question and one that we get asked quite often. So with individual insurance, it's really targeted to individuals, as it says in the name, and it's really dependent on that applicant's unique health and risk profile. It determines whether or not they can even purchase coverage, and if they are eligible to purchase coverage, it can often lead to higher or what we call loaded rates. Essentially, the poorer the health, the higher the rates if you're even able to purchase. The great thing about group insurance is that their rates are not loaded based on the insured's health profile or their unique circumstance. It looks at the group overall and the demographics of the group overall, which ultimately typically leads to members paying much lower premiums due to the size of the group than they would on their own.
So then if I have insurance through my employer, do I need to buy additional coverage? Is it recommended?
Great question. So again, the great thing about having group insurance is that through Acadia is that it travels with you. So let's say you have coverage through your employer and you were to leave that employer and go look for a new job. The coverage that you have with Acadia travels with you no matter what, wherever you are. So it's a really great advantage, is that continuity that you wouldn't get through your employer plan.
Makes sense. And if I already have mortgage insurance, do I need to buy additional coverage?
So with mortgage insurance, it's tied to the outstanding amount that you have owing on your home. And it depreciates in value as you pay down your mortgage. So once your mortgage is paid off, your life insurance is gone as well. In addition, most cases, the bank is the beneficiary. So if you were to pass away, the bank would receive that life insurance payout to pay off the outstanding balance on your mortgage, should you still have an amount owing before you pass away. So purchasing insurance through the Acadia Alumni Group Insurance Program through us does not depreciate in value. The amount that you purchase stays level, so you can assign anyone as your beneficiary, and when you were to pass away, they will receive the full amount that you purchased at the beginning.
I must admit, I'm still stuck on your comment of when you pay off your mortgage.
If and when you pay off your mortgage.
That sounds so lovely. So Scott, we were about to ask some questions about car insurance specifically. So can you explain the different types of coverage there are for car insurance and what a deductible is? And you notice I said deductible. That's sort of
that nasty deductible word.
That's right.
Yes, absolutely, Oonagh. So the easiest way for car insurance is you can divide the coverage into two separate sections. So you have your PLPD, or your liability insurance and accident benefits insurance, which is that part that I mentioned in the rapid fire questions when you're asked if you need to have insurance, car insurance, in order to drive a vehicle. That's what you need. You need to have liability insurance, and that ultimately protects the other person. So if you get in an accident and it's your fault, then that protects the person that you hit, the vehicle that you hit. Then the other part of that is what's called the physical damage coverage, and that's the coverage for your own vehicle. So even if you get in an accident and it's your fault, then it covers your own vehicle as well. And that again is subdivided into two separate sections. One is called collision, and one is called comprehensive. So comprehensive coverage covers those things like windshields, fire, theft of your vehicle, if somebody breaks into your vehicle, somebody vandalizes your vehicle, takes a key down the side of it. All those types of things are covered under your comprehensive coverage, which there's a deductible attached to that I'll get to in a second. And then the collision part is just like it sounds. So that's for the damage to the body of the vehicle due to the collision that you had. If you hit a telephone pole, if you bumped into another person, then that will be covered under a collision coverage. A popular question as well is what happens if you hit an animal, a deer? Because a lot of people, that happens a lot, especially in the Maritimes. That will be considered a comprehensive coverage claim because the animal is moving. It's a moving object. Same as if a rock fell off of a vehicle in front of you, or threw up a rock from a tire in the vehicle in front of you. It will be considered a flying object, and that will be covered under your comprehensive. So now a deductible part. So both your collision and your comprehensive, your physical damage coverage, have what's called a deductible. The liability piece for the other person does not have a deductible. You don't have to worry about that. But to get the damage to your vehicle fixed, you have a deductible. Normally they can be the same, but they're separate deductibles for collision and comprehensive. Normally you set your collision deductible a little bit higher than your comprehensive because the damage and the cost to repair that damage tends to be much higher. So what a deductible is that portion of the claim that you're willing to take on yourself. So if I have a $500 deductible for my collision, that means I agree in my insurance policy that if I get in an accident, in order to get my vehicle damage repaired, I'll pay the first $500 of the damage, then the insurance company pays the rest. On a comprehensive claim, same idea. Generally, you have a lower one because windshields aren't as expensive as replacing the front end of your vehicle. So, a $200, $250, $100 comprehensive deductible, same idea. I agree that I'll pay the first $250 to get that windshield repaired, and the insurance company will pay the rest. Now, the key to a deductible, and we'll kind of get into it if we get to some later questions, is that the higher the deductible that you choose or that you can afford to pay yourself, the lower you're going to pay your insurance on a yearly basis or a monthly basis, whatever you choose to pay. So that high, if you can afford a $1,000 deductible, it's going to be for comprehensive or collision, it's going to have a lower premium than a $500 deductible where you pay less of the damage to the vehicle.
Makes a lot of sense, and great to have the explanation. oddly enough, most of the examples you're giving, I've experienced. So thank goodness I have insurance. So a great segue into our first question from the audience, and there's one for each of you. So segue in from what you've just explained, Scott, for your question from Rod. Is there any sort of formula that tells you when it's no longer worthwhile carrying collision insurance on your car?
Oh, that's a very good question, Rod. You know what? It is a personal choice. Collision coverage. What you want to check on is the value of your vehicle, what's called the book value. There's red book and black book value. The other values you can look at is as your vehicle gets older. Another good indication is going on places like Auto Trader and Kijiji, seeing how much your same year with around the same kilometers vehicle is going for on Kijiji, because that sort of indicates the cost of your vehicle. So when you think about your deductible, you always want to think about the worst case scenario. My car is written off. I can't drive it anymore, or the cost to repair it is not as much as how much it costs to cover the claim. So in that case, as that amount that it would cost to replace your vehicle goes down, you want to get rid of your deductible. So the other piece is if you have a loan on your vehicle, or it's a leased vehicle, or if you have a loan on it through the bank, as long as you have coverage, or a loan, I should say, through the bank is going to require you to have that collision coverage with a deductible on it. But I would say my rule of thumb for my own vehicles personally is always around sort of that 10-year mark. If you drive your vehicles as long as I do, it's always around that 8 to 10-year mark. The value of your vehicle is really getting lower depending on what you drive, and you really have to weigh the pros and cons of how much I'm going to pay for that coverage. Am I okay if I don't get anything for my vehicle? If I get in an accident and it's my fault? So it is really a personal choice, but I always go around the 8 to 10 year mark to start having a look at that for sure.
Perfect. Thank you. And Carlene, I see that you've already seen the question posed to you in the chat function. So over to you to answer the question from Rod.
Yes, so the question was around the pros and cons of annuities. And when we're talking about annuities, we're talking about individual life insurance. So again, going back to the other type of insurance where it's really based on your unique needs and your unique health profile. So with annuities, I do think that there's certainly pros in having them, but it really, again, is dependent on your unique personal and financial needs and what you're looking to accomplish. And I would really recommend talking to a licensed insurance professional in your area who can take a look at your overall situation and perform a needs analysis and determine if that would be right for you.
Perfect. Excellent. Thank you. So please keep the questions coming from folks in the audience. So Carlene, what is guaranteed acceptance coverage and what are the benefits of purchasing it?
Great question. So guaranteed acceptance coverage is insurance coverage that can be purchased without providing medical evidence. So I'll back up a little bit. We were talking about the benefits of group insurance and that you don't need to have your own personal health profile looked at to determine the rates. It's an overall group rate. But within guaranteed acceptance periods, you can purchase coverage without providing any medical evidence. Outside of guaranteed acceptance periods, you go through what's called an underwritten application, and they look at your health profile and either determine if you can purchase or not. There's no loaded rates or anything like that. So with the guaranteed acceptance campaign periods, it's a limited time window where you can simply sign up and you'll receive the coverage, no questions asked.
Interesting. And again, one of the places I go to in my mind is during the pandemic, and sort of life insurance and insurance needs in terms of medicals being required, and then sort of backups and medical appointments even being difficult to get. So has there been any sort of I don't want to use the word leniency. I'm pretty sure that leniency and insurance in the same sentence is probably not a good thing. But has there been any sort of exceptions made during this time?
So with things like life insurance and critical illness insurance, it's not directly impacted by what's going on with the pandemic in terms of being eligible to apply for coverage. So we haven't really seen any need to make leniencies. It's more around if there's a need, if someone's applying for underwritten coverage and there's perhaps a delay in being able to get any required testing done. We've certainly experienced and given some leniencies around the time frame in order to go get that testing done. But in terms of being eligible or not, it doesn't really, it hasn't really impacted what products and how to be eligible for them.
Okay, perfect. Thank you. Let's see here. So, and it just, but kind of back and forth, just so that we can kind of keep everybody engaged here.
Sure.
How, back to you, Scott. Is there anything we can do to lower our car insurance premiums?
Absolutely, for sure. So, of course, being an Acadia alumni gets you lower car insurance, but there's a number of different things as well. We have a number, and not just us, most insurance companies have a number of different types of discounts that you can get. However, the easiest and best way to keep your costs down is don't get tickets, drive safely, don't get in accidents, obey the police when they pull you over so you don't get tickets for different things. Again, things like parking tickets don't affect your rates. However, when you have an accident, when you get speeding tickets, when you get any other kind of violation, that does increase your rates quite a bit. So the best way to do that is to not have those things on your record. Then, of course, there's all kinds of different discounts. So if you have two vehicles, for example, a lot of people are coming together, themselves and their partner, maybe decide to move in together. So now there's two vehicles in the household. However, each partner has their own insurance that they came into the relationship with. Always combine those with one of the insurance companies or the other, because you get a multi-vehicle discount, for example. Same idea with your home insurance and your auto insurance. For a number of different reasons, I always say you should try to have your home insurance with the same company as your automobile insurance, because there's what's called a multi-product discount, as well as normally some companies have different coverages that are advantageous if you have both auto and home with the same company. In case you have a claim that would involve both, for example, like somebody breaks into your vehicle and steals your golf clubs out of the back seat. The damage to the broken window that they broke when they broke into your vehicle is covered under your car insurance, but your stolen golf clubs are covered under your home insurance. So in that case, if you have them both with the same insurance company, generally that insurance company will only charge you one deductible. But if you have your home and your auto in two different companies, you're going to get charged the deductible for the broken window, and you're going to get charged the deductible on your home insurance for the golf clubs. So you can see that how that can have. What else? Yeah, accident-free is the best way. If your vehicle has an approved anti-theft device in it, there's normally a discount for that. If not, you can add one. And safety features. So a lot of times, if you're looking at purchasing a vehicle, you know what? Have your list of vehicles that you'd like to have, and then go online and do some shopping about how much the insurance is going to cost for each one of those vehicles. Because depending on the type, make, and model of the vehicle, even though they're around the same cost, let's say, to purchase, the insurance rating, the insurance price can be very, very different because of the safety features of a vehicle, or the reliability of the vehicle, or the option and how frequently that vehicle gets stolen, let's say, or how easy it is to break into, those kinds of things. So those are some of the tips that you can use. Again, like I mentioned earlier, the deductibles. Higher the deductible, the lower the premium. It's an easy combination there. So yeah, those are some of the ways you can save on some money.
Perfect. So parking tickets don't affect my insurance, but speeding tickets do.
Yes.
Not that I've had either, because not, ever.
Yeah, never.
And I assume the difference is parking are not moving violations, whereas speeding tickets are moving violations.
Exactly. And those tickets, we have all kinds of data that show that, if you speed, it's not when it's if it's when you're going to get into an accident eventually, right? There's a number of different apps you can get now, and we have one as well that you can download, where it's it's a safe driving app. So the app on your phone, if you have it turned on, it'll actually show different things like your cornering, like how aggressively you corner, how aggressively you brake, how closely you stay on the speed limit, which most of us fail that one, and different things like that. And it'll give you a score at the end of the day. It's kind of like a game, to show you that you're either a safe driver or you have some things to work on. And you'd be amazed at how different that is. And again, stay off. Big one is again the distracted driving tickets. We don't charge. There's not a huge surcharge for them right now. However, I would think that they're going to be the charge on the insurance side is going to go way up if you have a distracted driving charge in the future because of the stats that I presented earlier. Yeah.
Well, and that makes sense. And you know what, as a driver, but also as the mother of 2 drivers, I like hearing that. I'm not so sure about the app though. I was watching Carlene's facial expressions and I think hers were doing the same that mine were doing when you were talking about this app thing and telling me at the end of the day.
That's fascinating. I've never heard of that.
Yeah.
Here in BC, we have such a different car insurance setup. So I'm interested to learn more about that for sure.
Yeah, for sure. You can get it anywhere in Canada. There are some parts of Canada that we have that we do have a discount attached to it. Unfortunately, not in the Atlantic provinces and where BC is government insurance, we don't. But I believe in Ontario and Quebec, you can get a little bit of a discount as well, depending on your score.
Wow.
Yeah, see,
all depends on the score.
And that's exactly it. That's why I don't need the app, because I'm thinking the score is not going to work in my favor.
There is one way to decrease your car insurance as well through TD Insurance solely. Well, I'm not sure if other companies have it or not, but we also provide discounts if you get your quote online. So if you get your quote online versus calling into the client contact center, and as well if you choose to bind online, so if you choose to purchase it online, there's an additional discount as well there. So, and that doesn't mean you can get your quote online initially, and then you can call to get advice, and you still get the discount for getting a quote online. So just a little tip for TD Insurance themselves.
These are great little tidbits to be jotting down here for sure. So possibly segueing into a question for you, Carlene, based on me thinking about how quickly I take corners. What is critical illness and how is it different from life insurance?
So life insurance simply pays out a lump sum, whatever you've chosen as your amount to your beneficiary upon your passing. Whereas critical illness pays a tax-free lump sum benefit to you as the insured upon diagnosis of one of the covered conditions. There's 25 covered conditions, plus 6 child-specific conditions that are eligible. And if you're diagnosed with one of these, you like I said, simply receive a lump sum payout for however much insurance you've been insured for. I think when you're thinking about your mortality and you're thinking about something like critical illness, it's important to give thought to what would actually happen if you were diagnosed with something like cancer or you experienced a stroke. How would that impact you? How would that impact your family? Maybe you have debts that would be payable and you wouldn't be working to continue paying for those interest payments. Maybe you have healthcare bills. Maybe you want to try some more uncovered treatment methods. Maybe you want to take, like I said, time off work or take your family on a vacation once you're healed to be able to recover and recoup and spend that time with one another. This is, I mean, the sky's the limit to what you can use this money for. It's entirely yours. So where life insurance gives you that peace of mind that if you were to pass, your loved ones would be looked after, things like funeral costs, critical illness gives you that peace of mind that should something happen and you're still here, those immediate concerns can be addressed.
Excellent. And when traveling with family, you make sure that you have travel insurance. I did get that. I got that unequivocally from the rapid fire at the very beginning. I got that.
Yes. Cannot stress it enough. You should never travel without travel insurance. Medical bills, even in the US and abroad, can quickly become catastrophic. for even minor accidents. I've personally seen incidents where someone's broken an arm and it's been over $5,000 in the US. So for a comparatively small fee, travel insurance gives you that peace of mind that you're not going to be out of pocket for those expenses, and that you're going to be well cared for in the event of an accident.
And that peace of mind is worth its weight in gold in so many ways, in so many regards. I mean, I traveled internationally with a friend who thought she was having an allergic reaction. And I was like, are you absolutely sure you're having an allergic reaction? Because we're not going anywhere if you think you can get through this. And it's horrible. It's horrible to think that way.
Definitely.
So in terms of being covered for extended health and dental through a parent's plan, when should an individual purchase their own extended health and dental insurance?
So when we're talking about the age limits, so as I've mentioned, it's 21 or 25 if you're in school full time. So after that point, or if you've graduated prior to then, it's time to start looking at your own extended health and dental options. Maybe you are out looking for a job and you have that gap in coverage. It's really important to keep coverage in place. So finding your own plan to cover that gap is a great idea. And it also continues with you. So maybe you get a job and they have coverage in place for you, but then later on down the road, you change employers. The coverage that you purchased through this plan would stay with you no matter what.
Okay. So just sort of back to the travel question again for a moment, and the pandemic conversation as well. When it's safe to travel again, do I really need to purchase travel insurance, even if it's just a quick trip across the border? And I know that we've just talked about absolutely don't, but sort of, it's kind of that across the border for a quick over and back again versus a sort of, a big plane travel ride for weeks on end kind of thing.
Exactly. So even if you're just crossing the border, I mean, certainly in a lot of the bordering provinces, it's tempting to go across the border to go shopping, outlet shopping, whatever the case may be when the borders do reopen. It's you never know what's going to happen. You could be in a car accident, you could trip and fall. As I mentioned in that case where someone had broken their arm, they were outlet shopping. And that's why I've kind of honed in on that. They were outlet shopping and simply tripped and thought, it's just a fracture, but it turned out to be a break, and a simple cast and x-ray ended up being over $5,000 out of pocket. And you don't want to end up in a situation like that. So for a very small fee comparatively, it's a great idea to just get travel coverage. You can get it very simply online to generate a quote. And then you have that peace of mind that no matter what happens, you and your loved ones are covered. You can also end up in situations where maybe you had a significant health experience when you crossed the border, and you could end up out of pocket for hundreds of thousands or even millions of dollars. And I think for all of us, or at least most of us here in Canada, that would lead to some significant issues such as bankruptcy or foreclosing on your house in order to cover those costs. So pay the small fee, get that peace of mind, and you have nothing to worry about.
And I love your attitude of when we start to travel freely again. It's that'll be coming, right?
It will come.
Absolutely. So Scott, I asked you several questions about car insurance. So I'm going to just toss you a home insurance question. I am keeping an eye on the time and can't believe how quickly it has passed. So I'm going to pose a question to you once again, just reminding everyone on the call that they have an opportunity to ask a question. We are running out of time, but I certainly want to make sure again that the opportunity is afforded to folks on the call. And then what we'll do is end off. I am going to do a draw for some giveaways that we have from both of you, as well as some stuff from Acadia. So while I get that geared up, Scott, I'm going to ask you to answer the question of what is generally covered under home insurance policy.
Sure, I'd love to. So generally under a home insurance policy, and when I talk about a home insurance policy, I'll talk about condo insurance as well as apartment insurance or renter's insurance also. And in most of those cases, in the condo and the home for sure, one piece is the home itself. So the actual structure is covered, as well as what we would call any outbuilding. So an outbuilding would be anything you have in your yard that's not attached to your home. So a garage, a shed, anything like that that's a building on your property, more or less. Could even be the doghouse, you never know. Be an elaborate doghouse. And then another piece of the home insurance policy, of course, the big chunk is your personal property. So your own contents that you have in there, which would be your furniture, any jewelry you have, different things like that. And then there is the personal liability part. So somebody comes and visiting your house and you forgot to shovel the walkway and they slip in the front yard and break their arm. They may go after you for damages or for loss of wages or what have you. So your liability there. The other piece that can be covered under a homeowner's insurance policy for that is if you have children and let's say they're playing baseball out in the yard and they break the neighbor's window, or they dent drive a baseball into the side of the neighbor's SUV and put a big dent in it. That can be covered in part to a limit under your home insurance policy. Now, one of the things that is very important for everybody when you're talking about home insurance policies, automobile insurance policies, they're very highly regulated by the government and a close eye is kept on them. So the coverage is close to the same. There are some endorsements that you can get that some companies offer and some don't. But auto insurance, it's pretty easy to get an apples for apples quote. You know what I mean? To make sure you're comparing a similar policy. As long as your deductibles are the same, your liability limit is the same, and you're quoting on the same vehicle, you pretty much can compare the two companies. With homeowners insurance, it can be very different. So the products it's not regulated very much by the government. And so the coverage that you can get and limits within your policy can be very different between companies. So you should always check on that. One thing that I always used to tell people when I was on the phone selling insurance is to check the limit on jewelry and furs. I know furs are not a thing anymore. That's just the coverage that we talk about. But all policies are not built alike. And things like stamp and coin collections, jewelry, expensive bikes. Now is popular to have wine collections and collections of fine alcohol. Those things under homeowners policies are not covered to whatever you have under your contents. They have limits on them. So you can only claim so much, such a limit on the jewelry that you have. And once you get past that limit, you talk to your broker, you talk to your agent, and they'll advise you as to whether you need to do what's called scheduling those items. So sometimes you can schedule a bulk amount so that you're just increasing that jewelry. If we talk about the jewelry amount, you're just paying a little bit more to just increase that jewelry amount, or you have a specific piece of jewelry. So you have a necklace that was handed down from generations. It's priceless and it's high quality gold and maybe has some diamonds in it or something like that. Or wedding rings are always very valuable. So sometimes you just schedule that and get separate insurance rider for that one piece of jewelry. The other thing is on those items, again, not all homeowners policies are created equal. Some of those policies for those individual items like jewelry, you can get coverage under one company or another for things like mysterious disappearance. So a mysterious disappearance would be, well, I'm out on a fishing boat on my vacation and my diamond ring slips off my finger and goes to the bottom of the lake. That'd be called a mysterious disappearance. Some insurance companies will cover that. Some insurance companies will not, depending on the coverage you have. So you really do have to ask a lot of questions and rely on the coverage. Again, I always tell people get quotes for sure, but make sure that once you get a quote, don't just make the change based on the price. Call your current provider, talk to your current provider, try to do the best you can to compare the coverage that you got from the quote you received to what you actually have in your current policy. Sometimes you'll find that it can be very different. Yeah, for sure. So those are sort of the different types of coverage that you have on your condos. One thing that's a condo policy is a little different too, because your building portion, any betterments that you make are covered under your homeowner's policy. So if you put down hardwood floors or you renovate your kitchen, those would be considered betterments or improvements to the standard unit that you purchased. And those would be covered under your homeowner's insurance as well. Very, very important for people with condos and people that have tenants packages like that rent to get insurance, especially for the liability piece. and it's popular for the students as well. You know, something happens in your apartment just off campus, and somebody gets hurt. You need that liability piece, because similar to what Carlene said about having that big bill, if you go away and don't have travel insurance, same thing can happen in your apartment. Somebody gets severely hurt, falls off a balcony, was an accident, but it happened at your apartment. You're negligent for it, and that can be, you know, depending on the severity of the injuries, it can be life-changing for the person who rents the apartment for the sake of very small premium for the year. So.
And yeah, and that makes a whole lot of sense. You know, and basically the whole concept of insurance makes a whole lot of sense in that example.
Yeah.
You know, I got to go back to that diamond ring while you're out fishing. And similarly to not traveling without travel insurance, Carlene, because I will never not travel without travel insurance. But likewise, I'm not going to go on a fishing boat with my diamond ring.
It may be good luck though, Oonagh. Good luck. You catch lots of fish that way. Don't want to leave home without your good luck ring.
So listen, folks, I'm delighted to say that I have two names here for the draws, and we'll say for the IA package, we have the name James Delegard. So if you're on the line, James, you have just won yourself a swag mail out from Industrial Alliance. Of course, with a little bit of Acadia stuff in there as well. And then from TD, we have Shelley Webb. So if you're still on the line, Shelley, we have something that we're going to mail you out from TD. And again, also with some Acadia stuff. So I see a hand raised there, and I think it may actually be from James Delegard. And I don't know if you have a question, James, or if you're just saying, yep, I'm here and I would like my prize, please.
That's all it was. I'm here.
Perfect. Good to see you.
Congratulations.
Good to hear you.
And thank you. And I'm a client of IA, so that's good.
Perfect.
Awesome.
Excellent.
Excellent.
So, folks, it's a little after 7, and as I say, I can't believe how quickly the time passed. I mean, it's something that, you know, most of us, and I'm sure both of you have heard this in your line of profession, that not many folks want to spend a whole lot of time talking about insurance or dealing with insurance or thinking they need insurance. But as you've both taken time and shared with us here this evening, incredibly important for us to consider all the forms of insurance that we've discussed here this evening. So thank you to Scott and Carlene for being here with us this evening. Really, really appreciate you being here and taking the time. And thanks to everybody on the line from the alumni community and abroad who have joined us this evening for this session. And as I say, for your friends and family at home who didn't manage to make it, we've recorded it. So we'll make sure that the link is available and live for anybody so that they can hear all the great advice that we've been given here this evening. So thank you again, Scott and Carlene, and happy rest of the evening to everybody on the call. Thanks for joining us.
Thank you, Oonagh.
Thanks for having me.
Very much.
Take care.
Bye, everybody. Take care.